Good afternoon, ladies and gentlemen. Welcome back to the 17th September Mid-Autumn edition of our weekly market review. As usual, I have my co-host with me here, Mr. Gerald Wong. How are you, Gerald?
Hi, Sunny. Hi, everyone who has joined us today. Today is the Mid-Autumn Festival, so I hope everyone has a good time spending your Mid-Autumn Festival with your family as well as close ones.
Yes, and last week in the market, we can see that there is quite a bit of a rebound that recovered from the first week losses that we see. So the CPI data also helping the market recovered some of those losses in the first week. And this week, we're expecting the rate cuts. So Gerald, will you share with us some of the points that we will be benefiting from the rate cut situation today?
Okay, yep. I think what a lot of investors are focused on this week is definitely the Federal Reserve meeting. So I'll spend some time to go through that as well as how that may impact some of the Singapore stocks, as we have already seen in recent weeks. Okay, before we start, the usual disclaimer that today's sharing is for information purposes only and should not be taken to be financial advice. We have an Ask SIAS that is coming up next week, 25th of September. So if this is something that you would like to participate in to ask Sunny and myself more questions, do scan this QR code to register. And this is an event that is free and exclusive for members of SIAS. Okay, if you find the weekly market review helpful, do leave us a review on Google. And if you're wondering how you can join SIAS as a member, you can scan this QR code or go to sias.org.sg/membership, where you'll be able to access various online resources as well as investor education programs. Okay, as Sunny mentioned just earlier, we saw the global markets having a strong rebound in the past week. In fact, this was the best week since the start of the year. As we see here, S&P 500 had a 4% gain, now back to above the 5,600 levels. Nasdaq even more spectacular with a 5.9% gain, with the gains led by AI-related stocks, as Nvidia gave a fairly positive outlook at one of the investor conferences. What we see for the STI as well is that it has reached a 6-year high, with the STI closing above the 3,500 level on numerous days last week. So effectively following the strong momentum that we see for US stocks. In terms of the key economic data point that came out last week, it is really this US Consumer Price Index data. This is the last major inflation data that we have before the Federal Reserve meeting this week. And what we see here clearly is that with the 2.5% inflation in August, that would effectively mark the lowest level in more than a year. And I think that has given investors greater confidence that the Fed may be able to cut interest rates fairly sharply. Okay, so this is what we see for the latest update of the CME FedWatch 2. At this point in time, when I checked last night, the investors are assigning a 61% probability around a 0.5 percentage point rate cut in September. Okay, and this would effectively represent a change from the past where most investors were expecting just a 0.25% rate cut. Okay, so I think what investors are looking out for effectively in the meeting this week is that almost certainly we will see a rate cut. The question is whether it will be 50 basis points, like what most investors are expecting, or whether it will be 25 basis points. With the greater expectations of rate cuts, we have seen US bond yields and Singapore bond yields continue to decline. Here we see that the 10-year US government bond yield is now at 3.65%, effectively having fallen quite significantly from where it was just at the end of July. Okay, I mentioned earlier that the STI is at a 6-year high. So we saw quite a number of stocks actually performing very well last week. Okay, if I look at the top gainers or the names starting with the letter S. Okay, quite interesting when I was updating this chart. So we have Sembcorp Industries, 6.2% gain, ST Engineering, 6.1%, Citron, 5.8%, Singtel, 4.5%. So quite a number of the Singapore-related names having performed well last week. And we see the banks also doing well, with OCBC having a 4.4% gain. In terms of the worst performers, we continue to see a number of the Jardine-related names here. So Hong Kong Land, DFR Retail Group. We also have got Thai Bev, which was flat in the previous week, and that would already make it one of the worst performers in the STI. Okay, CapitaLand Integrated Commercial Trust had a fall of 0.5%, and I'll go through a bit in more detail around the corporate action that was announced. Okay, I know there's been more interest in the Singapore REITs with the expectation of the rate cut. So I've also created this chart to show what are the best performing REITs, as well as some of the REITs that have been not doing as well. So the top REIT in the past week, Elite UK REIT, had a 14.5% gain. So overall, we see that quite a number of the REITs with a fairly depressed valuation, such as Elite UK REIT, Lipo Malls Indonesia Retail Trust, and OE REIT, actually had fairly sizable gains. Okay, on the other hand, we have still some of the REITs that are having losses in terms of the share price, with Digital Core REIT down by 3.4%, and it is a name that I'll go through in a bit more detail later. Okay, so Digital Core REIT, this is the share price chart that we see, closing at 58 cents yesterday. So while we have seen quite a number of REITs having a fairly sizable bounce, this is one of the REITs that's actually still remained range bound over the past few months. And we will look at some of the recent announcements to understand what are investors looking at for the REIT. Okay, so this is the most recent first half 24 distributions. What we see here is that the net property income declined by 13.4%. And with that, we see that the distribution per unit actually came down by 6.3% to 1.8 US cents per unit. Okay, so that will translate to an annualized distribution yield of about 6.3%. Okay, so in terms of the key portfolio metrics, what we see here is that the occupancy remains fairly decent. And this is actually backed by freehold assets. And we'll look at what are some of the tenants that Digital Core REIT actually has. Okay, in terms of the debt, the aggregate leverage of Digital Core REIT is fairly low at 34.4%. I think if I were to look at the average cost of debt, about 4.1%, and the interest coverage ratio of 3 times, which is also above the requirement of what the REITs are needed to have, which is closer to 2.5 times. Okay, in terms of the debt profile, we see that you have actually the REIT having a fixed debt that is 93% of its total borrowings, and then the floating is at about 7%. So we have seen that the aggregate leverage is not too high, but because the average cost of debt has gone up over the past 1 year, so that has actually translated to higher financing costs for the REIT. Okay, there was also an announcement made by Digital Core REIT last week, which is really this notice to acquire a further interest of between 0.2% on 40% of a Frankfurt data center that it currently already has a 49.9% stake in. Okay, so depending on whether it acquires 0.2% or the maximum of 40%, the acquisition cost is estimated at up to 213 million US dollars. Okay. In terms of some of the key stats of the data center asset, so this is a freehold property in Frankfurt. What we see here is that it was completed in phase one in 2017 and the most recent phase in 2022. So that would give it an average age of 4.5 years. Okay. The occupancy rate is 98.5%. So I think the REIT manager probably sees the value of this asset, which is why it is looking to increase its stake in this Frankfurt data center. Okay, so in terms of the rationale that the REIT manager has provided, they want to solidify the relationship, particularly with some of the Fortune 50 companies that are the customers of this data center, and they believe would actually have a fairly good credit profile. Okay, so this is what we see in terms of the existing customer profile of the REIT. If you look at the number one and number three top customers, okay, the number one customer is a Fortune 50 software company, which represents 39% of its customers. And then the number three customer, which is a Fortune 25 tech company, represents 12.4% of its total exposure. Okay, so how will this acquisition actually change the composition? We see that the Fortune 25 tech company will actually be increased in terms of the annualized rent exposure to 18% from 12% currently. Okay, so with that, we see that the Fortune 50 software company and the Fortune 25 tech company together would then make up more than half of Digital Core REIT's total rent exposure. Okay, the other rationale that the REIT manager has provided is that with this acquisition in Europe, the contribution of rents coming through from North America will fall from 65.8% to potentially as low as 54.3%. Okay, the acquisition is also expected to be accretive by about 1.7% to its distribution per unit, assuming that they are able to acquire 10% additional stake. Okay, so in terms of the valuation that we see for Digital Core REIT now, at about 0.83 times price to book, just about in line with the historical average. And if you're to look at the distribution yield, 6.3%. So this is something that is actually lower than what we see over the last 2 years. Okay, next I'll talk a bit about CICT, which is a name that we get a lot of questions on due to the ongoing preferential offering. So we see that the share price of CICT actually has rebounded from the lows due to the expectations of the interest rate cuts. And then more recently, there's been some volatility due to the announcement of the acquisition of Iron Orchard, as well as the preferential offering. Okay, I gave the details of the acquisition of Iron Orchard last week, but I wanted to just share a bit more about the preferential offering that has been announced. Okay, so offering shareholders the right to buy 56 new units for every 1,000 old units held at 2.007 cents per unit. And the idea is that this preferential offering will raise about 760 million Singapore dollars. Okay, so this follows a private placement that was previously held, and the units of this private placement was already has already commenced trading on the 12th of September. Okay. So as I shared earlier, this is intended to fund the acquisition of the 50% stake in Iron Orchard. Okay, so some of the key dates to keep a lookout for. The preferential offering has already opened on the 16th of September. It will close on the 24th of September. And the expected date of crediting of the preferential offering units and the trading of the units is expected to start on the 2nd of October. Okay, so some of the ways that unit holders can subscribe if you are interested in subscribing. So ATM online at investors.sgx.com through the application form that is provided, or through the provisional allotment letter issued to eligible scrip holders. Okay, so in terms of what to look out for in this week, we have the SIAS retail sales that's coming up on Tuesday, as well as the US Federal Reserve meeting. Okay, I'll put it on Thursday, 19th here, even though you see 18th September because I go by Singapore time. So by the time we wake up on 19th September, we'll probably get full picture around what has been announced through the US Federal Reserve meeting that is going to be held on 18th of September, US time. Okay, so with that, I'll hand over to Sunny, who will share with us some of the technical indicators.
Let me share my screen first. Okay, thanks, Gerald, for that in-depth sharing on what happened in the Singapore market. So as what Gerald mentioned, the Fed fund pricing is now pricing in, its market is now split between a 50 basis point cut and a 25 basis point cut. So the results that will come out on Wednesday, on the 18th September night or 19th September morning Singapore time, that could have that would bring a certain amount of volatility into our markets. And let's see what will happen on the index. So you can see that on a Tuesday morning now, STI index is up about 22 points. Earlier it was up over 30 points. And of course, now we have a new year-to-date high again. And I believe with this strong opening in the morning on Tuesday morning, we could likely see another record close on the STI index. So some of the names that Gerald covered earlier are beneficiaries of a lower rates environment. And in the past 1 month or so, we have seen that the iEdge S-Street index, okay, the benchmark we use to look at S-Street performance, is already up more than 4%. And with today's gain, and I saw some of the counters that are jumping in the morning, those are the REITs counter. So those are also the beneficiary of the lower rates environment that we are going to foresee coming forward. Okay, so the STI index is now at a new year-to-date high. We are at 3,593 points. We are at a 6-year high. The last time we saw this level was somewhere in 2018. And in 2018, the high that we saw was 3,641 points. So we have not seen the 3,600 points for a 6-year period already. And I believe this could be the next resistance level that the STI index is likely going to test. According to the indicators, you can see that the MACD is on a very strong uptrend trajectory since the beginning of August, after the pullback caused by the unwinding of the Japanese yen. We have recovered, okay, to a new year-to-date high. And according to the MACD, that momentum does not seem to be subsiding at this moment. As you can see from the last 10-14 trading sessions, the MACD has given us a positive reading, and that positive reading seems to be able to sustain going forward before we hit the next resistance level, which is 3,641 in 2018. The RSI indicator has also breached above the 70-point mark. In general terms, that is where the overbought level is. And looking at the recent high of the RSI on the STI index, we saw that in the July period where we have a good rally, and also in the middle of July as well, the RSI actually hit a high of, I believe, highest reading that we saw in the second half of this year was at the 78-point level. So even though the STI is at 76, there could still be some room to go up further to 3,600 points. From there, we could probably see some resistance, and market may likely may have some kind of a profit-taking happening if we hit above the 3,600 points on the STI index. But we'll continue to update you over here, and the big news that will move the market today or this week will likely be the FOMC results, the rate decision that will happen on Thursday. Okay. Next, let us look at the Dow Jones Index. So we had another trading day to look at the US index because today is Tuesday. So Monday, we saw that the Dow Jones Index actually had a new record close again. So this is an all-time high close of 41,622 points. Of course, during that day, we touched an all-time high of 41,733 points. Okay, so according to the indicators wise, the MACD because of Monday movement has already turned positive. That's why you can see a bit of a green shoot here on the MACD histogram. That means that there is some positive momentum in the Dow Jones Index right now. going into the FOMC rate decision. The RSI is reading at 62 on Monday close, and that is a healthy reading. It is below the 70-point overbought mark, and that means that it can still go up further, even though we are at a record high or an all-time high. Okay, so the previous time we saw the Dow Jones Index hit a certain, the previous high on the RSI was on the middle of July period. You can see that the RSI actually hit a level of 81 points. So this 62-point reading does show us that there is still some headroom that we can move for the Dow Jones Index before it really hit a certain kind of a strong resistance level, or indicating that there could be a change in trend going forward. So for Dow Jones Index, likely it will still power forward for this week until we see the rate decision that will have more impact on the US indices and the Dow Jones Index. Next, let's look at the S&P 500. So just to update you, the S&P 500 closed at 5,633 points yesterday after Monday night close. We are now less than 1% away from the all-time high that we saw in the middle of July at 5,669 points. So we are like about 40 points away from that level, and that is like 0.65% away. So that could mean that we could probably test this level in the near future. And the MACD reading has also turned positive in the last two trading sessions. That means the previous week, Friday, and last Monday. Okay, that means that we are looking at positive momentum coming into the S&P 500 index as well. Hence, the confidence that we have a very good chance of testing the previous all-time high in the month of July. The RSI has a reading of 58. Okay, it's above the 50-point neutral mark. So it is still telling us that there's positive momentum in the uptrend that we see since the beginning of September. It's above the 50-point baseline, and it's also above the 14 days RSI moving average of 53. The recent high that we saw in the RSI hit a level of 81, similar to the Dow Jones Index. So there is a lot of headroom for the S&P 500 to move much higher. And I think investors could take the upper bound of that Bollinger Band, now reading at 5,698 points, to be the first resistance level that we will see on the S&P 500 index. Lastly, let's move to the tech-heavy NASDAQ Composite Index, which has not been performing quite well recently. Okay, after the NVIDIA results, we saw a very big drop, and of course, the previous unwinding of the Japanese yen, we also saw a big drop somewhere in the August period. So we are now about 6% away from the all-time high that we saw on the 12th of July at 18,671. The NASDAQ Composite closed at 17,592 points on Monday night. And the indicators wise is behaving similar to the other two major US indices. We got a positive MACD reading. We got a crossover happening on the last two trading sessions on the NASDAQ Composite Index. And when a crossover happens, usually that is a signal that the uptrend is likely going to persist and continue, especially if it crosses over from under the zero baseline to above the zero baseline for the MACD indicator. So this could be an indication that the market could be moving upwards in the next couple of weeks. Lastly, the RSI is at the 54-point reading. It is above the 50-point neutral mark. So there is positive momentum, although not as strong as the two other previous US indices. The highest reading we saw was at an 80-point level as well. So in any trending market, usually the RSI would go above the 70-point mark. That is quite a common occurrence. So that means that the RSI do have room to move up, or the momentum still have room to run before we see major resistance. And the resistance that we are looking at for the NASDAQ Composite Index could be the 22nd August high at 18,017 points. I believe that is a psychological level, the 18,000 handle. And after that, of course, we hope to see that maybe the NASDAQ Composite could challenge or retest the all-time high at 18,671 points. Okay, so these are the updates that I have for you this week and a roundup of the indices. So anything to add, Gerald? Okay, so I think, okay, we may have some connection issue over here. So we'd like to thank everyone for tuning in today on a Tuesday. Hey, Gerald's coming back online. Yes, Gerald, any last words before we end today's session?
Okay, I think basically, as we have shared, a lot of the focus is on the US Federal Reserve meeting. So that is something that investors will keep a lookout for as to whether we see a 0.25% or 0.5% rate cut. I think that will effectively impact how the markets, both in Singapore as well as US markets, react to it. So stay tuned for our next weekly market review, where we will definitely update you as to what the US Fed decision is and how the global markets have actually responded to some of these US Federal Reserve decisions.
Yes, so I think we are all thinking that it's either a 25 basis point or 50 basis point cut, and market being split right now between these two probabilities. I think that could have a lot of volatility. So do trade carefully in this week at least, and we will continue to update again you guys next week on what has happened in the rate decision and how the market reacted. So thank you everyone for tuning in. Thank you, Gerald, for for doing the sharing today, and we'll see you again back to the Monday schedule where we'll see you at Monday afternoon for the next weekly market review. Goodbye.
Thank you.
Thank you.